Welcome back to our daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday, 28th of January. Looking at dollar yen, some interesting moves on dollar yen actually. We saw initially as the Asian market turned into the European session, there was a slight rebound actually. 109 figure was around about where dollar yen was trading when I wrote the morning report. It's just slipped back about 20 pips or so, but there isn't still a sense, a slight sense, that there could be a basis of support starting to form, or at least there's some sort of stability given the fact that we've fallen away quite sharply, certainly sharply in the last week or so. Momentum indicators are still corrective though. RSI 40, which is under 50, which is a worry. RSI tends to sort of come back to this level, 40, 45, pretty much on all of the corrective moves aside from that one early Jan. 40, 45 area seem to be a basis of support. Well, it's at 40 now, so you're in the realms of where you'd want to be finding support if you are bullish. Stochastics and MACD are still corrective near term. So there is still an element of downside risk, and 108.50 I've got as a sort of a basis of a support area, and it has been that, certainly on an old breakout, became sort of a basis through December, sort of moved underneath that in early Jan as the market really came off quite sharply, but is sort of a ballpark area between 108.50, 109 figure, at which point you'd be, if you're bullish or if you're still positive about dollar yen medium to longer term, you'd be looking for dollar yen to start finding support, I think. But obviously we're in a critical moment for that. So it's a little bit of an interesting point that we've just rebounded off 108.70 again, there or thereabouts, 108.70. And there's a slightly less severe condition on the sort of hourly chart whereby it was just sort of consolidating, I suppose. And if that 108.70 mark continues to hold, then could we start to build some sort of conditions for a recovery? You'd need to see the RSI on the hourly above 60. That is an absolute given. I mean, look at how in the last week and a half, it's never got above 60 and failed each time. So that would suggest that is that would be a turning point potentially, as would the MACD lines above neutral. Look at that. Sell signals going on left, right and centre around that neutral point. Is this going to be another sell signal? That would be the fear. I mean, there is sort of hints of that starting to come through. So that 108.70 mark is important, I think, on a near-term basis, and you'd need to start seeing a positive candle really forming as well for the bulls to suggest we are starting to see some support forming. But for now, it's still pretty much negatively biased and not looking great. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.